SOFI update here on the 10th. So, rough day. I mean, not really that rough. You can buy a dip, but it did invalidate the move I talked about in the last video. And if you're familiar with Elliott Wade, that's just the way it goes. There's tons of invalidations over and over and over. And so when I give you a possibility, when it works out, it's amazing because you think that possibility is going to happen. But when it invalidates, you just look at the chart and you figure out the next possibility. What's the most probable scenario going to happen? What am I going to do when it gets to this price? What am I going to do when it gets to the other price? Where am I going to sell? Where am I going to buy? Etc. So that's just the way it goes. And the move from last video got invalidated. If you didn't watch that video, I had this as a wave 3. And I was looking for 822 and up here to 850 for a third wave. But instead, we sold off from 794 all the way down here to 749, which makes this very unlikely to be a 5-wave move. So, yeah, we'll go over 3 different possibilities now for the counts. And I'm going to go over the least likely first. So, least likely is the bear count. Last video, I talked about we needed to hold 794 for this count to be valid. And what do we do today? We double topped at 794. So technically, this is still a valid count. That count would be this. Probably down here to $6. Based on this, this would be this would be 1, this would be 2. But the timing of it, I would expect this to come down here probably in the next couple of weeks. And maybe make a wave 3 and then bounce into the 4th wave for earnings and then sell off down here to $6. Again, this is very unlikely. We're going to need a significant sell-off in the overall market for this to happen, like a 10% correction or something. It's not going to do it with a 2% correction or whatever we had today. So, again, this is a big demand zone as well. So I say this is the least likely possibility. Let's get into the second most likely possibility now. So the second most likely possibility is that this still is a wave 1. And this is still a wave 2. And this is a wave 1 overall of the third wave. So this would look like it'd be a deep 4th wave correction. It wouldn't come back into the first wave, so it is valid still. And this would be a second wave. You can see here I have this demand zone between 725 and 745 highlighted. That's probably where we're going to go in the next couple of days. So look to buy the dip there. I think pretty much either way. And if this were to play out, I'd be looking for a third wave up here to like 855, pullback, and then probably high 8s or $9 for the overall third wave. And then the same thing that I talked about in the last video pretty much. Probably going up here to 950 for that gap fill. So that's the second most likely, and here is the most likely scenario now. The most likely scenario is that this is actually a B wave. So we did get an impulse move, we got a pullback, and we got another impulse move. And then we came back in here and invalidated that move. If we draw a parallel line right here, you'll see that we basically hit the top of this parallel line and then reject and come down lower. And so I would be looking at this whole thing as A and B, and this would be the overall C wave. Where could that C wave go to? You're looking for anywhere between 735 all the way to, I guess, all the way down here to 682. But again, you have a lot of demand zones down here. So I would say 735 would be the most likely. If it breaks below that, you're looking down here at 722, and then after that, down here at $7. All of those would be valid for a second wave. So this would be a C wave right here, overall second wave. And then we'd be back on a third wave after that. So then you'd be looking for from there. So kind of the same thing on either one of the waves. A little bit different though, in that the second possibility, you're probably going to go a little bit higher because this is just first wave of the third wave. On this scenario, you're going to be starting the third wave overall from a lower area probably. So that's what I see on the chart right now for the three different counts. I'm leaning towards either that one or the nested move. But either way, again, it's not going to matter that much with earnings coming up, I don't think. Let's take a look at where we're at with the moving averages. Again, we're below the 50 now. We did finish above it yesterday, which looked promising until CPI ruined everything. So we need to get above 781 now in order to get up here to the 200 DMA. And you have support here at 733. So maybe this will end up being a running flat. A running flat is just this. A, B, and a short C wave like that. Maybe down here to the 20 DMA, and then we can take off. That would look like something like that. So that is the three counts that I see. Supply and demand are going to come up big in this. We have a gap up here at 786. These are the two areas I'd be watching, 725, 745, and then up here at 781 to 790. I bought the dip today. Hopefully you did too. We got earnings in 2 weeks. So I'll keep you updated on the counts. We'll see if it keeps on invalidating. We'll see which count actually works out and go from there. I know that sometimes they get invalidated. It gets kind of confusing, but this is how I trade every day, and it works out pretty well because you always have a plan. If I just said, "Oh, it invalidated," and get mad about it, then it's not going to be very beneficial for me. So anyway, that's pretty much it for this video. Let's see what happens tomorrow. I think we're still bullish into earnings, and maybe we'll hit this 850 gap here in the next couple of weeks. That's it. Leave me a comment, like, subscribe for more updates, and I'll catch you in the next video.